Hi everyone, welcome back to my channel. This is Ben Morales, your personal financial coach and consultant. So here you are watching this video today. You've been watching a lot of content on YouTube. You've been searching, you've been doing your homework, just like I tell my clients to do all the time. And you're at the step where you think you want to apply for a home equity line of credit so that you can start implementing the velocity banking strategy. Well, I commend you for getting that courage to do that and starting the path to eliminate your debt, as well as starting to leverage that debt in a positive way to start building wealth for you and your family. But before you do that, I definitely want to just highlight a couple of things. And I want you to really know the answers to these 5 questions. Obviously, if you think of any other questions, you want to focus on those as well. But these are some of the most that I think are key, because if you don't know the answers to these questions and you start applying for a home equity line of credit all willy-nilly, you could hurt yourself, right? You could actually delay the process. And typically for a bank, when you go to a bank, I remember when I worked in the banks, if someone came to apply for this type of product, and particularly a refinance of a mortgage loan, and they got denied, you're talking about 6 months that they had to wait all over again to then come back and reapply. So we want to avoid that at all costs. So let's answer the questions on this board to make sure that you're in the best position so that when you go to apply for that line of credit, you get approved on the spot. So the first one that you want to make sure that you know the answer to is, what credit score do you need? Okay, what is the credit score that is needed for the home equity line of credit? All the banks use different credit measures. There's typically 3 credit scores, and they're going to use one of those 3 credit scores. You should really know what your credit score is. Now, finding out what your credit score is simple. You can ask every consumer. It can get a free copy of their credit report. Just simply go to annualfreecreditreport.com. You can get your credit report there. There's an option for you to pay for your credit score if you want to do that as well. But if you have a bank account, right, or if you have a credit card, and if you have online banking, most of the banks will offer you your credit score for free. You're only going to get 1 score, but at least it gives you an idea of what your credit score is and where you're at. You can also look at your credit score, register for free at Credit Karma. They're not sponsoring me in any way or anything like that, but these are just some of the things and conversations that over the years that I've had with clients and help them to start monitoring their credit, and you can take advantage of that as well. Okay, so you want to know what your credit score is. You want to know what the bank, the credit union needs in terms of a credit score so that it'll put you in the best position. So along with that, your credit score is also going to determine, number 2, do you have any promotions right now? So as I've been doing research and working with clients, I'm finding that more and more banks are offering promotional periods, because remember, the bank needs to lend money. That is the purpose of a banking institution, is to lend money. A bank that does not lend money will not stay in business very long. So right now, there are a lot of promotions. Typically, promotions are going on anywhere between 6 to 12 months. Okay, so you got to do the homework and you got to ask the questions. If they have any particular promotion, what's the time period of that promotion, right? Sometimes you get a lower rate in that period. So a lower rate for 6 months or 12 months, you got to look at the lower rate and how much debt it is that you're trying to pay off. And very well might be worth it for you to take advantage, move from the bank that you are at, especially if they don't offer you a line of credit, into the new bank or credit union to take advantage of those 6 to 12 months that they're offering you. And again, it's going to help you speed up the process of paying off your debt. So find out if they have any promotions, okay, please. The third one is, what LTV will get me the best rate? If you don't know what LTV is, LTV means loan to value. So typically, when you're getting a line of credit, when you stay 75 to 80% loan to value, you end up getting the best rate. And what the loan value is, or loan to value is how much your home is worth, okay? And basically what you're trying to borrow. That's how a loan to value is determined. They look at what your home is worth, what you're looking to borrow, and then they determine what percentage that is. So simple math. Let's say your home is worth $100,000. You want to borrow 80%. You want to get a home equity line of credit that is 80%. you would be borrowing $80,000. That's how this is determined. So typically, the more you borrow, it goes over 80%, right? Then typically you're not going to get as most favorable rate as you would like to. So you want to find out what LTV will give me your best rate. All right. So let's talk about number 4. Is the HELOC principal and interest? This is huge. You do not want to get any HELOC where the payments that you make only affect the interest. When you are implementing the velocity banking, you want to get a HELOC that's going to impact both. So as you're making those payments, right? Remember, when you use a home equity line of credit, now you're using it as a checking account, and every time you deposit or you put your check in, what you get paid into that line of credit, okay, that is in itself is a payment, right? But if your payment is only affecting the interest, then that means that the principal that you owe on that balance is not being paid off. So you want to make sure that when you're using the home equity line of credit, it is going, when you make those payments, those chunk payments, and you're sending in every time you get paid, whether it's every week, twice a month, whatever the case might be, that transfer is causing not just the interest to go down, but also the principal to go down. And that indeed is how velocity banking works, and you speed up paying off your debt. So that's very important. Please make sure that as you're making those phone calls and you're doing the research, you find out if that HELOC is principal and interest. Another thing you want to find out is how long is the draw period. So every HELOC is going to have a draw period, okay? And the reason why you want to know that is because you're only going to be permitted, sometimes it's going to be 5 years, most of the time it's going to be 10 years, okay? You're going to be permitted to draw from that HELOC, okay, and use it as if it was like a credit card that we talked about for 5 or 10 years. What happens after that is you're going to have to pay off the balance that you owe after those 5 or 10 years. You're either going to have to make a balloon payment, is what it's called, or the draw ends, the draw period ends, and now becomes an amortized loan, right? And we don't want an amortized loan because the interest gets applied up front. So what that means is, after the time frame that you have, whether it's 5 or 10 years, whatever you owe after that period, then you have to make a balloon payment. A balloon payment means that, let's say you owe $50,000 after this 10 years. Once that 5 years or 10 years are up, you have to completely pay off that $50,000, right? Or you have to refinance that line of credit and start the process all over again. Where a draw period ends and then it becomes amortized, well, that one, what that means is that you're in that draw period, say for 5 or for 10 years, and then after those 10 years, it amortizes, meaning it becomes a loan that you have to pay back within the next 20 years or within the next 10 years. So you get more time than a balloon payment to make that payment off. So it's really important that you know these questions up front. I would add probably one more as well, is you want to make sure that find out how long they allow you to use this line of credit. Some of them, after 10 years, that's it. You can't use it anymore, and you're going to have to refinance. Other ones, basically, you can just continue to use it perpetually at your disposal. But just keep in mind that 5 or 10 years, you're going to have to keep that in mind, because after that 5 or 10 years, you do have to pay that back. So I hope this information helps you. If you have any questions or any concerns about that, leave them down below. I'll look at my comments a little later and make sure that I get back with you. So continue to follow, share, and subscribe. I do thank you for your support in helping the channel grow and bring this information out to the community and the clients that I'm trying to serve to better their finances. So until the next video, have a blessed evening. Thank you so much.